Hey guys, quick roundup going into the closing bell today. It has been sort of a sideways and grinding day for most of the session, just sort of between the central pivot and the first resistance. So it's been, a day of sitting on your hands quite a bit and just trying to wait for the opportunity to come to you, right? So it's been, the best thing that I can say about it is an exercise in patience. And there were other opportunities, retracement opportunities. I'm talking to all of our friend Eric about some of this stuff. Just trying to get our heads in the same place. And really, the key to the whole thing is waiting for the perfect opportunity. So let me just show you what I've been doing. All right, let's go take a look at the charts here. Here they are. So this morning, right, we had this gap move higher in the triple Qs. And then, really over the course of the session, this whole thing does not amount to much of a trend move at all. It's just sort of oscillating in this area, the sort of the value range that we would normally expect it to oscillate in. And, I've been on the line with a couple of you, one in particular, everybody's favorite. And we've been looking at, where does the opportunity really lie when the market's doing something like this? And, I keep coming back to this idea of the market being in the box, because a lot of what happened sort of earlier in the session, right, in here, is very unpredictable in terms of the swings that you're going to get. And if you look at these volatility bands, right, you can just use Bollinger Bands for this, 2 standard deviation moves away from the average. You can see that the price is traveling in a wider and wider range over the beginning of the session, and that these things aren't really traveling sideways until we get to that box, which is up in here. And then the bands are narrowing. That says volatility is narrowing. And, sometimes some conditions, that's a thing you don't want to see for some types of trading. For what we're doing here, it really is. Because in this region, we had the opportunity to get in and out of some nice, profitable trades. I did some in the triple Qs. I did some in the futures, on the future side in the NQZ23. That lets you capitalize on a little bit more profitability, right? When what you're really looking for it to do is to track from, down here at the moving average, effectively, right, up into that overhead resistance. And so you're looking to get long, right, long, and then, fourth one was a killer, of course. But the first one didn't, that wasn't where you were getting in anyway. So the first opportunity there was really your test. That's where you're looking at the market saying, okay, what's it going to do? And then, once it had this inflection in place, you could wait for the next one, catch that, up, catch the next one from here, up. And all of that was leading you right back into the measure of central tendency, which is this purple line right there, right? So that's the average of what's going on. And over the course of the day, there have been other places. So I just drew this line right here not all too long ago. Haven't actually used that for anything yet. But I drew that because these bands are starting to narrow again. And I am anticipating that going into the close, my opportunity for an entry, may be down in this region right here. And again, we would just be looking in this case for moves that get you in at the bottom, right, out at the top, in at the bottom, out at the top, and just continue to capitalize on these ranges that formed over the course of the day. And, don't look a gift horse in the mouth. Don't look for some giant swing, because the chances are you're probably not going to be able to get on the right side of it on a day like this when everything's opening up, widening up. It's just better to go and take the trade that is the easiest to take and try to stay on the right side of the market that way. Okay, so with that said, that's it for today. That's my strategy going into the closing bell. There really wasn't anything to talk about earlier, right? So earlier in the session, we just really were compressed between those pivot lines and then oscillating pretty wildly, and that doesn't really make for any good trading. So no ideas until about 11:45, 12 o'clock Eastern time. What I will point out is, and what Eric brought to my attention is, 10:30 every day we've been seeing. If you guys have that clock, if you have the intraday trading thing that we did for the boot camp guys, take a look at it. There's a market reversal time there that in the past couple of years, has been sort of soft. Every now and again, it'll get you in to a nice swing. For the last few weeks, it's been the clock has been like clockwork. So right at 10:30 Pacific time, 1:30 Eastern time, when that predicted swing in the S&P 500 is there, all these indices tend to make a counter trend move, and if you get caught in that, it can be pretty unpleasant, right? So eyes on the prize, stay aware of what might be going on, stay conscious of things that are happening. If Eric wouldn't have pointed out to me that was probably something that he should be aware of, I might have forgot it myself, and I'm the one who put the clock together. So there you have it. That's today. I hope you had a great one so far, and I will see everybody tomorrow.